Everybody is getting so hyped about the current Bitcoin rally. Everybody thinks we will go higher, probably above 100k, but maybe there is a problem. There could be a potential issue with the stock market. If the stock market were to crash, where would Bitcoin land? Because have a look at this. This is the S&P 500 in the last 20 years. It's been a very smooth ride. Over here is the Corona crash. And here on the left, we've got the start of Bitcoin. Bitcoin has pretty much only ever existed in a bull market. This here is the global financial crisis. This here is the .com crash. Now the Nasdaq doesn't look that different, only that the .com crash was more pronounced. And here is the Nasdaq relative to the S&P 500. Again the .com crash, but we are at all-time highs, relatively speaking. So never in the history of the stock market was there so much money relatively in tech stocks. This is peak risk taking. Now what would happen to Bitcoin or to crypto in general if stocks weren't going up that much anymore? Would we see an entire collapse of the price? Would we see potentially again the $20,000, the $10,000 Bitcoin? What's the potential risk here? How much impact does the stock market have on Bitcoin? There's a mathematical way to measure how much one asset moves in tandem with another asset. So you can measure mathematically if asset A goes up, how likely is it that asset B goes up as well? And vice versa, right? When asset A goes up, how likely is it that asset B goes down, for example? That measure is called correlation, and it goes between +1 and -1. That's the correlation coefficient. And you can measure over time how well two assets move in tandem with one another. If we are at +1, so at the top here of this line, then in this case the S&P 500 and Bitcoin would move exactly in the same direction on the same day. If we were at -1, then when Bitcoin would go up, then the S&P 500 would always go down. When we are at 0, then the assets move pretty much independently from one another. So when asset A goes up, then asset B could go up or down. There's no real connection here. That's what correlation coefficient 0 means. Now this is a chart starting in 2016. And look at how at the beginning the S&P 500 and Bitcoin were pretty much not correlated at all. Right? The line was pretty much hovering around 0. Then we got a massive jump up. That was in March of 2020. That's the Corona crash, by the way. Then it went down again, then went up. Now it's down again. We tend to be in the area of positive correlation, but not massive correlation, right? It was 0.08 in the last 90 days. So what this tells us is that yes, there might be a weak connection between Bitcoin and the S&P 500, but it's definitely not massive. So even if the stock market were to crash a lot, Bitcoin could still keep up relatively well. It's not necessarily a given that Bitcoin has to go down as well. Now have a look at the correlation coefficient between a large altcoin and Ethereum. So this is BNB relative to Ethereum. This correlation coefficient goes between 0.5 to 0.9. It's always strongly positive. It's never negative. The assets tend to pretty clearly move in tandem with one another. This looks very different to the chart that we've seen before. Now, what are the potential implications from all of this? There's two implications. The first is we can't necessarily derive what Bitcoin will do depending on the stock market. So even if the stock market were to be now very, very high and it was to go down, Bitcoin might do well. The second takeaway is that Bitcoin is still a good diversifier in a portfolio. So what you want to have when you own a portfolio of different assets is you want to have assets that do not have a lot of correlation to one another. Because if asset A goes up and asset B goes down, then overall your portfolio will just stay flat. And that's what you want, right? You want a portfolio that doesn't fluctuate too much in value. You only want to own assets that over the time trend upwards, but you want to own assets that don't necessarily move in the same direction at the same time. Thus, by owning Bitcoin and by owning stocks, you can always reshuffle your positions. If only Bitcoin is going up and stocks are not, then you can sell some of your Bitcoin and move it into stocks. When it then reverses again, then again you can sell some of the stocks and put this into Bitcoin. So you can always rebalance. You can always have a nicely well diversified portfolio. Here's the problem with crypto YouTube. People promoting becoming degen or buying 100x coins. That's what gives clicks, but that's not what's going to bring you forward. I refuse to take money from centralized exchanges. I refuse to take money from crypto projects. I refuse to pump and dump a coin and filling up my pockets in the background. I don't do any of this. Instead, I share my knowledge in the form of tutorials in the premium membership. So that's content that won't do well on YouTube, but that builds up skill over time. You can also directly contact me over there. You can directly pick my brain. Feel free to check it out. TheBitcoinStrategy.com is the link. Now this all makes sense in theory, but what about the Corona crash? We all remember how stocks went down and how Bitcoin also crashed. And yes, this is true. In times of extreme liquidity crunches, when people sell everything in order to get US dollars, and we do see correlation across the board, not just between Bitcoin and stocks, but even between stocks and say gold. There is no real way to diversify away from this besides owning some cash on the side. Let's have a look at the Corona crash. This is the S&P 500 and it went down by almost 40% in the matter of a few days. Now here is Bitcoin during the same period. Yes, Bitcoin also went down. It actually started a bit earlier, then it went sideways. But the real crash, the 40% drop that happened in a single day, it came with a bit of a delay, right? It didn't come directly with the stock market. Bitcoin was still relatively fine. The stock market went down, and only after the stock market already crashed by like 30%, this is when Bitcoin really went down. So stocks went down, people wanted US dollars, people were looking for how can I further reduce risk in the portfolio, and only a few days after the crash in the stock market came Bitcoin as well. And so this is Bitcoin. Let's have a look at gold. Here is gold. Pretty much the same thing, right? Isn't that surprising? Of course, the magnitude of the crash isn't as big for gold. Gold isn't as volatile, but still, wouldn't it be intuitive that when prices go down, that people might shuffle their assets into gold? And that in times of crisis, you'd be protected with gold, and gold should rather go up. In theory, that's true, and in most times this is true, but not during an acute liquidity crisis. The liquidity crisis was so strong that even gold went down. And have a look at the correlation coefficient between gold and the S&P 500. It's extremely low. It hovers around 0. Recently, it's slightly above 0, right? 0.2. Still, it's very low. But during the Corona crash, it shot up. In other words, the argument is very weak just because we saw correlation during the Corona crash that Bitcoin will follow the stock market. Usually it's pretty well decoupled from everything. I don't dare to predict where the stock market is going, but I don't think that a crash in the stock market would be too bad for Bitcoin. And I know this is a somewhat contrarian take, so feel free to put your arguments against this down below in the comments. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Link is down below.